Hello everyone, I'm delighted to introduce our next panel, Crypto at the Crossroads, Role in the Financial Landscape. Let's welcome on stage our moderator Tom Higgins, founder and CEO at Goldeye, who will introduce his panel. Tom, dear speakers, the stage is yours.
Thank you very much, everybody, and we're all still surviving day 2 after the party, so well done for making it here. So thank you so much for coming. And I think we've got the youngest member of our audience that we've ever had, so I hope you're going to go away learning more about this very interesting industry. I expect to report later. So we've got an incredible panel here because crypto has been through the mill. It really has, I must say. From when I got interested in it, probably 6 or 7 years ago, as a sort of, something that might be happening, to then building lots of software in that space, seeing it boom, bust, come back, be reborn, and now having actually what I think is probably the most interesting and sustainable future of the product, because it's gone through the hype curve and it's come out the other side, and there's much more clarity of where it's going and what it's doing, and it's got its real use in the world. So we put this panel together to look at where it's going. What are we doing? What do brokers need to do today to be able to be prepared to access this really, really interesting market? And where is this interesting market? Where's it going? And what do you need to do? So I hope you will go away from this with a bit of education as to what's happening, but also a few takeaways as to what I'm going to go and do and check these things to see where I'm going to go. And these experts on here, they're proper experts, so they do actually know what they're talking about rather than me. I'm just an interested person. So they really know what they're talking about, so listen to what they say. So what we're going to do is we're going to start with each person to introduce themselves, who they are, what their company is, and then an interesting fact about them that you probably didn't know. So could you start?
Sure. The mic's on. Yep. Good afternoon, everyone. Apologize, this is the post-lunch slot, so it's not been a food slump, but let's hope this panel will be exciting and provide some debate for everyone for later. My name is Audris Siow. I run the business development unit out in EMEA for Talos. We are a global financial services technology firm that helps institutions connect and sort of enter into the digital asset space in terms of trading execution. So we do anything involved from the entire order and trade life cycle, ranging from pre-trade investment management decisions through to execution, trading, and right down to the usual credits, custody, settlement. That's what we are, and I'll pass on to our next.
Hello, everyone. It's an honor for me to be here today. My name is Demetrios Tseas. I am a senior cryptocurrency analyst. I work for Ciphertrace. Ciphertrace is now a Mastercard company. So we provide a series of tools regarding cryptocurrency analytics, risk analytics, forensics investigations on blockchain, and services. Our customers, we have a wide range of customers, our banks, card acquirers, issuers, law enforcement agencies, regulators, central banks all around the world. Our products make the transactions in crypto safer and make the stakeholders make educated decisions in crypto compared to the risk appetite that they have. Thank you.
Thank you. Hi, everyone. My name is Nimrod Cohen. I'm the COO of Zota. With my line of job, I'm responsible for overseeing and improving the performance of the operation, as well as to align it properly with the company strategy, the company development, in all aspects, from risk to business development to compliance to crypto as well, which we'll discuss today. For whomever doesn't know Zota, Zota is a unique payment hub, a global financial company providing payment solutions mostly to the emerging and challenging markets, offering our merchants to penetrate this market by enabling more than 1,000 payment options over a variety of countries and regions. And by that, also increase their brand awareness, their abilities, and so on. Thank you very much.
Hello, everybody. Thank you for being here. My name is Andrey Stoychev. Thank you for taking some photos, my friends over there. As my expertise is risk management and liquidity, I'm helping Nexo to do everything by the book and develop their liquidity arm, some other crypto activities, hedging purposes as well. And of course, Nexo, one of the biggest crypto company with more than 6 million satisfied clients globally, more than 7 billion credits give to the clients, and more than 200 millions in interest paid to them.
Hello everyone, my name is Alexis. I'm with Grant Thornton, our partner at Grant Thornton Cyprus. I'm escorted by the youngest member in the audience, my son Maximos. I thought I'd start him early with crypto and blockchain so that when he gets in his teenage years, he can support his dad as well. I've been called an expert as well in the past when it comes to crypto, but when you hear somebody being referred to as an expert, just run away, yeah, because it's such a fast evolving space, crypto, that you can never be an expert. You have to keep on top of it all the time. So that's just for starters. At Grant Thornton Cyprus, I ran the distributed ledger technology business unit. We're actually the only firm in Cyprus that has a dedicated team of consultants in Cyprus that has a dedicated team dealing with crypto and distributed ledger technologies. On my title, there's also the Future State Alliance mentioned. The Future State Alliance is a tokenization platform, a real-world asset tokenization platform that we have recently launched in partnership with another two parties, a legal and a marketing firm. And we're very proud, hopefully soon, to announce our first tokenization project, one of the very few that are taking place within this part of the world. Thank you very much.
Thank you very much, everybody. And I guess maybe you listened to my cyber panel yesterday because none of you gave any personal information away that could have been used to hack your passwords or anything. You can get that in later. So crypto is such a funny word. I mean, it's a mathematical term of cryptology, but actually cryptographic mathematical algorithms and things. But what it means today is so many different things. It's from speculative trading on Bitcoin, hoping it's going to go up and down like this and you're going to make some money at the top and bottom. It could mean investing in something for much longer term. It could mean paying for goods directly in crypto or in fiat and turning to crypto or the other way around. It could mean so many different things. And what I would like the panel to address is, what is it being used for today out of all those different things? What's it really being used for? And on the trading side, if it's being used speculatively, how easy is it to access the liquidity that you will need for trading? And if you're looking at payment services, how easy is it to access the different stable coins or whatever coins you're using to get in and out of fiat and the stable coin? So I open that to everybody.
Tom, if I may, I just would reframe that question a bit as well around the access and liquidity. I think it's well worth to think about what we mean by access. Is it about having a fair and sort of playing field, transparent and fair access for all the players and participants, but also thinking from the type of liquidity that an investor, be it at institutional level or retail, of every man, every person, access to liquidity. So liquidity comes in many forms as well. So I think those are the key things that we need to think about when we're trying to answer, is access to liquidity, to crypto liquidity, quite common now. And as part of your question is, does it need fixing? Or I think it's about a time of time passage, right, where the accessibility is improving dramatically. Technology has been a great enabler for all, both from some retail perspective or institutional perspective. But what people need is some level of navigation, because there's still a lot of fragmentation out there. And there are tools, but on top of tools, there also need to be the common understanding of what you're entering into, what sort of liquidity you're banging up against. So from a retail perspective, it's very different from wanting to sort of engage with institutional liquidity. There's a whole world out there that's quite different. I'll sort of pause here. I might defer to some of my panelists.
I would like to approach this. Thank you for the question. First of all, I would like to distinguish, let's say, crypto into two basic categories for those of you that may are not so familiar. The first category is crypto as a currency, and the other one is crypto as a technology. So we see as a currency, money, for example, has three properties. We may use it as a medium of exchange, a store of value, or a unit of account. Now, we can most likely exclude cryptos being used as a unit of account, meaning that prices today are not denominated in euros, with the exception of NFTs, which are in fact denominated in Ether. So that leaves the other two categories, which are mostly used in crypto as a medium of exchange and a store of value. In my personal opinion, I would say more, especially in Bitcoin, used as a store of value. Now, in terms of trading, there is one caveat here, which is the high fluctuation in terms of its price, which makes it not a good, let's say, medium of exchange, because it may lose its value, but however presents some trading opportunities short term. Now, on the other side, crypto as a technology is being used by different industries, and we can see fantastic use cases. For example, in the banking industry, stable coins are used for fast, immediate cross-border fund transfers. We can see applications in academic titles due to the immutability of the blockchain, supply chain, provenance of goods, healthcare, and many other industries.
Nimrod, I'm sure you've got a view on this one.
I would definitely say that crypto today is being used for trading. I think it's some kind of a clear picture that it's maybe some things that people are using for the ambition of making money, of investing and of trading, other than paying for goods or replacement of money, which we will talk later. In terms of the liquidity, I think it's not so hard today for any kind of a person or a company to get a wallet, exchange a little bit, and get crypto to their hands. Maybe in the withdrawal stage, when you want to convert your crypto to fiat and you want to put it back to your bank account, then maybe you can encounter some kind of difficulties. If you refer to the blockchain analysis, for example, so you can see that the top 3 countries where assets are being held is USA, India, and Nigeria, which is very interesting because from one hand you have the USA, which is, let's say, the Western economy, a Western type of a country, and from the other end you have India and Nigeria, which is some sort of exotic countries and emerging markets, which I mentioned previously. So I think in the Western economy, they're still waiting for some killer feature to bring the crypto more into it, and then maybe to be more familiar and common for paying for goods and stuff like that. While in the emerging markets, people are using it, I think, also for safety, because in these countries, the regimes in the history maybe used to take people from their assets, their bank accounts to close, currency is not so stable, many things are not so stable, economy is challenging, so yeah, people are holding a significant amount of crypto and actually putting their trust into it, which is quite interesting. So that's how I see it.
Yeah, if I may add here, I will try to be short, but I think that the key is liquidity these days, especially. Not only for retail, but mainly for institutional clients. Liquidity is super important to be able to offer, let's say, a good service to the clients. And obviously, before, I don't know, 12 or maybe a little bit more months, the liquidity was really good. Now we see that it's not like it used to be before. It's getting better step by step. And I think that all companies, not only crypto companies, but in general financial sector, is focusing on the liquidity side of the business to offer a stable service to the clients.
So to sort of summarize that, the liquidity provision is getting better, but you do need to have some sort of way of getting the best liquidity, because people don't seem to want to just go to a single exchange now because of the risks involved in that. And people might say, well, I used to just go to Binance because it's the biggest, but just going to one place that's the biggest, that is, who knows what will happen in the world, is most institutional markets will think is a place they don't want to be. But if we go right back to the beginning, when Satoshi invented this, whoever it was, where, when, whatever, who knows, invented this thing, it was supposed to completely replace fiat money. I don't think the term fiat really used then. I remember when I heard it first, I'm talking about a car. No, it's money. Could that ever happen now, or is it so changed so fundamentally that it's just a different thing now?
It's true that crypto did come about to replace fiat, and that was Satoshi's initial thinking behind it, challenge the current economic system. However, a number of issues have, either delayed or put a stamp on that one. Main one being, I think it was mentioned before, volatility. The fact that crypto is so volatile prevents it from being a medium of exchange or a store of value for that matter. The uncertain regulatory environment surrounding crypto is also a factor of concern, a factor that has been delaying the mainstream use of crypto. Having said that, a recent development, I don't know if people know it, the coming of MiCA. MiCA is a market in crypto assets regulation, came into force June 23, will become a law, should become law in all European countries by the end of next year. Tries to bring some clarity as far as the regulatory environment is concerned, deals with issues like the licensing, in terms of licensing of crypto asset service providers, the buying and issuing of crypto assets, the obligations of people issuing asset-backed tokens and electronic money tokens and a number of other things. But crypto has not become mainstream. For something to be called a success, there's got to be mass adoption. Crypto has not had that. A lot of investment needs to go into educating, first of all. We try and give, I was part of the University of Nicosia until recently, University of Nicosia, of which Demetrios was part of as well. Does a hell of a lot of work on educating people about the product, but also the technology behind it, blockchain technology. The lack of trust in crypto, the fact that it's not backed by a central authority, whether it's government or a central bank, coupled with the frauds and scams that we hear about all the time, makes people cautious in embracing with it, and investors really need to be cautious about any investment in this product. There's a couple of technical issues as well that prevent it from becoming mainstream. Scalability, for starters. Some of the major networks, Bitcoin, Ethereum, have been quite slow in their transaction processing, making them more costly. So-called layer 2 solutions like the Lightning Network with Bitcoin are making things much better. Another technical issue is that of interoperability. For crypto to replace fiat, they've got to be cross-market interoperable. This is not yet the case, and they need to seamlessly integrate with the existing financial system, which still they've got some way to go.
So it looks like the crypto is not going to replace fiat in the short term, but it's a really good technology that's been invented for moving stuff around really, really efficiently. And I know that because there are some countries which it's very difficult to get paid from using fiat, but you can whiz it across the USDT in a few milliseconds and off you get it, and it arrives. So it's really useful like that, but it does bring, as you highlighted, it brings a lot of risks that are different to the traditional financial system that they didn't look at before. It solves a lot of problems too. But what I'd like the panel to look at is what special risks does crypto in, I'm not just talking about BTC trading, I'm talking about stable coin, government-backed stable coins, so CDBCs, and the speculative coins like BTC. What special risks does that bring that you don't have with the traditional financial system?
I'll give you quite a straightforward one. I think crypto, or most of the properties of crypto, its amazing potential of being immutable is also its very threat itself. So you think about traditional trading, you can bust a trade, as we call it, or put a line through it. With the immutable record, there isn't that sort of element of how we can reverse out, of the parties reverse out of a transaction or parts of the transaction. So there it lies in itself. It's great, undestructible quality, but then in the same strain, if there is a serious problem or a matter, how do we unwind from that error? So that's the first probably use case of where this risk is slightly different and esoteric towards the crypto asset.
Yeah, thanks. So what are the risks? So we had recently two major announcements from major regulators. One was from the Financial Stability Board, a joint statement with the International Monetary Fund, saying a few days before, saying something along the lines that VASPs should have systems in place to identify and mitigate crypto-related risks. Back in October, only 1 month behind, we had the FDIC saying that crypto brings in new types of risks which are difficult to assess, fully assess. Now, what are some of these risks? We have fraud risks associated with the 24/7, 365 character of blockchain, the use of anonymity enhanced coins, mixers and tumblers, which all try to obfuscate the transactions. We have jurisdictional risks. Where, in fact, is a VASP being domiciled? Do we know it? We do not always know where a VASP is domiciled. Is it in a high-risk country? Is it within an FATF or FATF regional-style body? We have regulatory risks. Some of them Alexis mentioned. Not all regulators around the world currently agree what is crypto. Is it a property? Is it a commodity? Is it taxable? Is it a security? What is it? So still we have some clarity here. We have other risks such as operational risks regarding the smart protocols, the underlying technology, which in some instances is still in the bleeding edge. We have asset tracing risks. It is difficult to trace, especially between blockchains, and this requires specialized tools and in-depth training and education.
Let's be a little bit more positive, because we are speaking about so many risks. Yeah, it's as a pretty much new technology, and together with technology asset for trading, investment, or daily usage, there are a lot of risks, obviously. Companies like Nexo, let's say, we are putting a lot of effort to educate our customers for all these risks, because, like when you invest in Forex or CFD instruments, you are also informed with all these risks which are coming. And we mentioned several times regulations. I think that this is really a good step for the crypto industry in general, for the crypto customers, crypto companies, crypto partners, and everywhere, to put in place some really good framework for the business. So partners to be more relaxed, customers to be more secure, let's say, and more educated at some point. So I think that, yeah, together with the risk, there are also a lot of steps taken to be to overcome all mentioned risks.
Thank you very much. Could I ask you to start thinking about questions, because we'll have questions for the last few minutes at the end. So start thinking of those questions now, because you've learned lots of stuff already to think about some questions. One of the areas that if I go and talk to someone who doesn't know anything about this market on the street and they've been reading the red top papers in the UK or listening to the radio, they'll go, oh, cyber's just used for criminals, isn't it? I mean, crypto's it's just criminals, isn't it? They just use it to extort money from you. They don't probably realise that cash is much, much easier to use than actually crypto for that, because it's not all logged somewhere. Is that still the case, or has that changed? Do they not use it anymore, or is it not really a problem? It's so small.
I'll go. Sure. I think there is still a high percentage of cybercrime, and yes, all the frauds that we've been talking about within the crypto environment. Let alone, well, you have actual countries which are basing their economy and are enhancing it using cybercrime. If you take North Korea, for instance, and others. So as long as this kind of reality exists, and yeah, it will certainly be an integral part of this environment, no doubt.
I also think that the industry itself is growing up. I always used to describe it or frame it as a kind of a outgrown teenager not wanting to wake up and start the day early. I think we're seeing a lot more traditional finance players entering the crypto space as well, and I think that brings lends a lot of a bit of discipline, structure, frameworks, processes, stuff that you might think, leave it to the boring parents to do, but actually, as a whole, it makes the environment a lot safer, and people take comfort in that. And I think so, to your question, I think they're more, generally much more widespread adoption, not just from a crypto or crypto trading perspective, but just from a value perspective, a representation around, as you say, a store of goods and services transfer. And if you dig further, I mean, the society is actually getting very educated nowadays in terms of the exposure to what you have in white papers, social media, all that. One element that's key is that they're starting to see actually the social benefits around what we've talked about earlier around in blockchain and DLT, about the social impact, accessibility to funds. At least half the world still have a lack of access to, let's say, banking facilities, which I heard from a previous panel yesterday. So there's many layers deep down, and actually, if you look at it from a societal element, I think there's far wider embracing of this concept over time. It's just that, fortunately or unfortunately for us, the industry started off on a sour note with some of the lack of risk management elements. But we get there, we learn, humans learn.
So summarising that, so we've got a few interesting areas that you can get involved in as brokers in the crypto space. So speculative trading, or actually accounts being funded in stable coins, or bills being paid in stable coins. But there's lots of risks and there's lots of hurdles and there's all sorts of problems, but they're all surmountable. So Andrey is being very positive on this one. They're all surmountable, they can be dealt with. Regulators are going to come in, much to I imagine Satoshi's hatred, they are going to come in and they're going to help us, because they're going to make sure it's all run in a clean, sensible way. That's coming with MiCA, it's coming in the UK. I'm not sure what will happen in the US, they're fighting about it. But how will regulation change the mass adoption of crypto globally? Do you think once that's in place, if we imagine tomorrow all the regulators in the world were agreed on a sensible regulatory scheme, what would happen then?
I think for Europe, we have MiCA coming up, and I think a lot of us gone through a lot of other rule sets in our time. I think the key thing around harmonization brings about joint oversight, and as been discussed by the panel, crypto or digital assets is a 24/7 thing. So it's global, it's borderless. And if you try to go in on it alone as a sovereign state or country, you're going to have problems. So some level of harmonization in terms of the regs, infrastructure, and the framework is a good thing. And for one, sitting in Europe, suddenly I'm feeling quite good because we are ahead of the Americans. So.
Regulation is always good, wherever it comes, and it helps bring people's trust in the product and increases adoption. On the other hand, over-regulation could hamper innovation, which is something that we're not looking for. So the various governing bodies, whether it's the European Union or anybody else, they need to be careful the way they regulate. They first of all need to understand the product, because that's where the main problem lies. And I'm happy to see that the local regulator is coming up with a sandbox where you can actually place your product so that they can actually study it and be able to give you some solid feedback on it. So things like that, initiatives like that are quite necessary in getting the regulation on the right foot.
I think we are having a good example in the FX and CFD industry. 15 years ago, it was totally different space, not so regulated, more freedom, but a lot of problems with onboarding with, let's say, tier 1 banks, with other partners who are really strict regulated and have a really strict rules, compliance, AML, etc. Nowadays, for the regulated brokers, it's much easier to communicate with such kind of partners. I think with the crypto, it will be pretty much the same. Once the regulations are in place, it will be much easier to communicate with the other regulated companies. And the good thing here is that the regulators, the governments, they have already experience and example. So we can jump a few years faster, not to lose time to adjust, let's say, ourselves, the companies and also the regulators.
So if we've got this regulation in place, so we know so we can start planning. Can you each think of something that brokers should do now to get prepared for this, so that they can either list a coin that's going to be traded or start receiving payments? What could they do now to start getting ready for that?
You mean the regulators?
No, brokers.
Brokers. I would sum this into one word, and I would say education. Education, because the space, and this was already discussed many times, the space is changing so quickly. Even we are in the space, we have difficulties, some areas, to keep on track. We have hundreds of blockchains with different properties. We have thousands of tokens, all with different properties. Some of them are difficult to classify. So even the Securities and Exchange Commission has classified 37 tokens as exchanges. So we need to understand better the individuals, all the stakeholders, the regulators, should understand better about the new things and be educated in the space.
I would say find your niche, stick to your niche, stick to what you're good at. So we are seeing a lot of, more and more separation of responsibilities. And so, there you've got custody, settlement specialists, or you have executional trading specialists. Stick to what you're good at, I think, because it's better to be someone or something for someone than be nothing for everyone. And that's helpful, I think, in terms of the pace at which we're running in this industry. So that would be my take on it.
Would add to that get their clients access to some sound legal and tax advice, because this is a new product. So having a trusted party to advise you on the legal issues as well as tax issues, it's very important.
So we now got a situation, so you've decided you want to do it. It's really exciting. You're going to make loads of money out of it. Your clients are going to love you and keep coming back. So got to choose some technology to do this, because the prices aren't just going to come out of nowhere. I was going to say the ether, but I suppose that word's been taken over now. So prices got to come from somewhere. Execution's got to come from somewhere. And it's got to be cleared, settled, or it's going somewhere. Where do our brokers go for their technology for that and for liquidity? What do they do with their platforms they've got now? How do they actually connect it up?
You mean for the brokers in general?
Yeah.
For the brokers, I think it will be constantly battle between the business developers and the brokers and the compliance guys, because it's really hard. I guess business developers also liquidity departments on the brokerage, they would love to put on the same place several exchanges, crypto exchanges, to create a really good liquidity and to offer this to their clients. But it's really hard to be onboarded in all these exchanges because of their regulatory, compliance, AML risks. So that's why this battle, I think, will end once, again, regulation is in place. And then, I guess, all these issues, small issues, which prevent offering a really good crypto product to FX and CFD world and retail clients will be solved.
I think you were asking about where would they go for some sort of technology solution.
Yes.
I would say most people vote with their feet, meaning if you look at your broker business and you're trying to bring on a new area or new product, for example, crypto, key thing here is actually ask yourself, who's your target audience, the KYC, but in a very different way, not about knowing your customer, but knowing your customer, not just their requirements, what were their pain points. In order for them to want to buy into this new asset class, or maybe they're already experts in crypto trading or digital asset trading themselves, think about, put yourself in their shoes. Actually, what are the things they're trying to solve? If it's connectivity, which partners are the ones that best to give you a solid base? If it's accessibility, like you said before, where are they connected to? So it's a multi-layered sort of thinking approach. I'd love to have the shameless plug, but I won't do that here. The key thing here is actually deconstructing that challenge from a different way, actually looking at your consumer's point of view. That's more important because they probably are navigating something quite different and they're asking very different questions from where you're sitting.
Have we got any questions in the audience now? Because we've got a couple of... Oh, I've got lots of questions. So I think the gentleman in the stripy shirt at the front was probably the first to put his hand up. Yo.
My name is Yaro. I'm from Mercurio. I have a very quick and easy question for you. The digital euro is supposed to be launched very soon. How will it change the landscape in terms of currency, digital currency, and crypto?
Who wants to address that in a few seconds?
I would like to approach this. So the digital euro is categorized as a central bank digital currency. So first of all, for all of the audience, it is not categorized as crypto. It is not decentralized. It's from a centralized government and will be used, to my opinion, it's helpful, will be used as with other fiat currencies and will complement the existing financial services. That's what I think of.
So it sounds like it's just a better stable coin that's actually stable rather than one that's going to do this stuff and then do that. I think it sounds very interesting, to be honest, actually, as well, because I think it's a really interesting idea, getting paid in something that can flow across the world without problems, and some of the payments getting paid from places like Africa, you wouldn't believe how complicated. Well, if you try to do it, you will, but it's incredibly complicated. Have we got another question? Yeah, the gentleman in the black shirt, just here.
Yeah, thanks a lot. My question is not addressed to any particular speaker. My name is Nick. I'm from Paperless Solutions. And so the question is, can we make a kind of a wrapped-up vision of whether crypto will go the way of traditional financial markets in terms of evolving in more complicated derivatives instruments, because we were talking about, you were talking about lots of risks involved, right? And where there is risk, we can hedge something. When we can hedge something, we can yield something from it. And so there is a huge area for proprietary trading and for derivative trading as well. So in my opinion, we can see some of it like in traditional financial markets, right? Some like interest rate derivatives, option derivatives. What's your vision on that problem?
I would definitely say it's a huge yes, representing the institutional space and our client base. There's a huge demand. In fact, we just completed our set and launch options trading support on our digital asset platform. So derivatives in crypto, in its sort of straight up form with futures, perps, CFDs, options, it's definitely, there's appetite for it from, particularly when I said a lot of traditional finance players are now coming into this space as well. I would say then also the low level, which I wouldn't use the word low level, but something that's easy for people to understand, the retail level, ETFs, and the way the regulatory landscape is going in terms of ETFs, and also some of the big players in the industry are backing ETFs. It's going to stay. So it's yes from me.
I think we've got time for one more question.
Plus one. I just, because
okay.
obviously it's a really big, first of all, opportunity for all newcomers to start working on these derivatives and additional, let's say, instruments for trading based on the crypto assets.
I think we have run out of time now, so thank you so much. If you've got other questions for the panelists, I suggest you grab them afterwards, because there were a lot of hands that went up, and I'm sorry we can't address them all now, but you can tell they really know what they're doing. So I'd like to summarize just quickly. Really interesting space. I mean, we've been providing technology to this space for quite a long time, and there's a lot more interest now in the liquidity side, the payment side, than we've ever seen before. So really interesting space. So I would look at it more now, start planning, and I think it's going to be a good journey for you going forward, because it's more settled on where it's going. So thank you very much to my panel for brilliant answers. Thank you for attending and for listening.